What's going on, guys, and welcome to closing out the 12th week of investing on the channel. It's Friday night, and we're going to go over kind of what's going on with the market and the portfolio. Some good announcements from SCHD, which finally ended up showing up. Dividend stuff, and generally what's going on with the channel. So let's pull into the channel tracker and, let's dive into it. All right, so here we are on our channel tracker. This blue line is where we are at. And so I want to apologize right up front. I have been the worst YouTuber over the past couple weeks. It's just been so busy. Thankfully I have automated investing set up, but I've been doing a lot of stuff outside of this channel, which I work full time and do other stuff. But so we're gonna follow across this. March 24th of 23. That's today's date. Didn't weigh myself at all this week. I did get to the gym, so I was working out pretty hard, which is nice. That feels good, but I just didn't even weigh myself at all. It kind of is what it is, to be honest. I wish I could have taken the time to do that. And I know that sounds like a cop-out excuse, but I've tweaked some stuff with my rental car company, and that's been keeping me real busy. And then just some changes in my office at my day job has had me picking up a little extra stuff. So that's kept me busy too, which is fine. It is what it is. But so I've been kind of running all over the place for the past week and a half, 2 weeks. But the market's been all over the place for the past 2 weeks too, so that's okay. Now, unfortunately, again, no update on the weight loss journey or the exercise and that kind of stuff, but yeah, whatever. We'll get back to it. And next week we're gonna have some awesome videos because we're going to Disney World. So I'm also prepping on that kind of stuff too, which is brutal. But our investment balance is at $3,257.71. Total dividends earned, we're still at that $12.31 figure. That should be changing very soon. Total growth, we're down $256.86. YouTube income, so we still made that $100 from referrals on Sofi for those who signed up. Thank you, appreciate it. Subscribers, we haven't gained any, we haven't lost any. If we did lose a couple subscribers, I'm sorry. Maybe they'll see this. And if we picked up new subscribers, I care about you. It's just the total number, it's the same. So however that happened, it's my fault. I was a terrible YouTuber this week, and that is what it is. Total views, we are at 170,014 views. Kind of cool to get out of the 160s. Now we're in the 170s, so that's kind of fun to see. And then total watch hours, we are creeping up towards that monetization number. We're at 3,564.9 watch hours. So that's kind of what's going on with the channel. We're going to dive into Seeking Alpha and review kind of what's going on with the portfolio. And I want to touch on some stuff with SCHD. All right, so let's take a look. All right, guys. So here we are in Seeking Alpha, and I have everything sorted by value as I always do. We're just going to run through who's winning the race here. Just an update on both O, or Realty Income Corporation, or SCHD, which we're going to talk about a little bit today. We have put $600 now at this point into these two stocks or funds, and then Procter & Gamble PG down through MPW, we have now contributed $300 to each one of these. So, kind of just to put some reference to the leaderboard. So of the two heavy hitters, we have Realty Income Corporation. We're down about $35, similar to SCHD, also down about $35. All right. With the market coming down, that's not that bad. We're putting $10 every day, Monday through Friday, into both of these. And we're building up some shares in some pretty pricey stocks. So that's what I care about. These are both dividend payers, which is awesome. Pretty much everything in here is a dividend payer. That's why it's here. But SCHD announced their dividend finally. I was kind of complaining about that at the beginning of the week. Why hasn't this happened yet? And it happened, so that's good. So the snapshot date, March 22nd. We should have had like 7.5 shares. And let's dive in and take a look at what the dividend looks like here. I mean, over the past year, it's down basically 10%. So that kind of explains the $35 loss, but whatever. So we're going to dive into dividends. This dividend is looking great. So they're paying 60 cents per share. We're sitting here with again like 7.5 shares roughly on the 22nd. So we're looking at $4.50 of a dividend payout. That's like a free day or of investing on all the other stocks. This is a $10 one, but whatever. So that's pretty good. And then the thing that I like the best about that is if you look at the trend here, right? It looks though typically the quarters kind of increase as time goes. The focus of SCHD is to show some growth in the market, but to also increase the dividend. And this jump, last year, March 22nd, the dividend was 52 cents. We're getting 60 cents a share. That's about a 15% gain. It's like almost 15.5% gain from year over year on at least the first quarter. Now, I hope that we get a similar trajectory through the rest of the year, but a 15% gain on the dividend would be fantastic. That would be really, really nice. And that just means, statistically or historically, the first quarter payout from SCHD is always the worst. So we have, 51.76, and then it went up into the 60s and 70s. We have 50 cents, then it was 53, 58, and 62. We had 44.19, then 44.2, and then 50s and 60s. You can see this trend where the beginning of the year is always the worst for SCHD, and then it climbs. I am hoping to see a similar pattern. There's only one year, I think, ever that it was worse after the fact. Yeah. So 1 year ever that it was worse after the fact. That was 2016. I don't know if anything weird happened, but that's kind of the story. So there's good reason to think that come quarter two, when we get our payout in June, just again, looking at the historicals, that's usually going to be about June 27th, June 28th, June 29th, July 1st, June 29th. So it looks like basically end of June, beginning of July. That should be a bigger payout. Not only will we have way more shares, possibly double the shares, right? It's double the time invested, but a higher dividend payout. So maybe we'll get that $10 dividend payout in SCHD next quarter. So that'd be pretty cool. Anywho, jumping back here, sorting by value. We have JetQ. So this is one that, again, I wanted to buy and put in the portfolio to watch. I liked it. I thought everything on this looked good. Fund's not even a year old yet. It pays a dividend every month, and here's where we're at. So $315. The forward dividend yield is 11.78%, but keep in mind it hasn't made a full year of dividend payments yet, so that is going to continue to rise. 0 years of growth. The fund's not a year old yet. Year-to-date performance, though, we're up $8.14. I said it before. I'll say it again. I think this is going to climb, but I'm not a wealth manager, credit counselor, financial advisor. I'm just a guy in a triangle-shaped room ranting on the internet, and everyone knows that. And sometimes I'm right, sometimes I'm wrong. Like when I talk about MPW, and I thought it would be up by March, and I was terribly wrong. I still think it will go up, though, but whatever. Procter and Gamble. This is winning the race by far. As far as growth is concerned, with our dollar cost averaging, we're up basically $9, which is a 3% gain on 300. So that's awesome to see. This stock it's down. If we look over here, it's down 5.13%. But because we're buying it every day, we are up 3%, which is stellar. I love that. Now that we have more shares of stuff, the days where the market goes up is just great. We'll talk about that too. But so Procter and Gamble doing great. Pepsi, another one, doing great. We're up $8. $8 on 300. It's a great return. I'll take that all day. This is another one though that is down 2.77% year to date. So where we're buying it every day, it's helping us to maintain pretty good purchasing power on this, and our cost is low on it, and we're making money even though the market's down on it. So Jeppy. All right. So a lot of people talking about Jeppy. I like Jeppy. I like JEPQ. They're both from the same trading house, and they're both managed by the same dude. So pretty similar funds. Jeppy does also pay out monthly like JEPQ does. And we're down $4 on Jeppy, which is negligible. It's especially not bad since it's down 2.99% year to date. I think a part of that reason why we are slightly better than the year to date is because the dividends, they pay, and we reinvest them. So that's good. And then we have AT&T. AT&T has been one of those really up and down type stocks for us this year. We're down $8. The stock's about flat. So, just buying it high and buying it low. Dividends looking real nice at over 6%. So I look forward to the first dividend payout that we'll receive from them. Or I should say first real dividend payout. I think we had like a half a share of AT&T before. BlackRock. BlackRock is getting annihilated right now because of all the craziness in the market. They're going to obviously react to Federal Reserve announcements of rate hikes. They're going to react to, or the pricing on BlackRock's going to react to like the bank run conversations and people talking about, are the banks safe? What's going to happen to the country? A lot of conversations popping up on the BRICS dollar, and that doesn't look good for anybody in the U.S. market. So, pulling over here, we're down 8% on the year. We're not quite that bad off, but I appreciate buying BlackRock at $644 a share. I thought it would take almost an entire year to get a share of BlackRock, just because the trajectory of the stock prior. But now that the stock price is coming down, we might make it there before the end of quarter two. That would be awesome. Probably not, but if it dips into the fives, then yeah, I think we'll be there in the end of quarter two. So that'd be pretty sweet for the dividend payouts. Anywho, continuing on, MPW, right? This is the favorite stock that everyone loves to hate, and we all hate to love it. But so MPW, we're finally over $200, so that's good. That means we're only down $95 on it. But we see this share count rising, which is awesome. They are a dividend payer quarterly, so if we can get to like 50 shares, 60 shares even by the time we get to next quarter, as long as they keep that dividend up, we're cooling. So I love that. This dividend is looking ridiculous by the day as the stock keeps dropping. They're still paying this out. So we'll see what happens with that. Oh, excuse me. Oh, I'm recording this and it's 11:09. I'm tired. But yeah, I mean, we'll see what happens with MPW. But for now, it's a crazy looking dividend. They're down year to date 34.74%, popping back up to MPW. If we look at the 1 year, they're down 63%. So it's just like insane drop here on a stock that's been otherwise relatively stable. Even through the pandemic, like at the worst of the worst, it crashed down to $13. We are almost half of that now. So, a lot of short interest picking up. The market cap is, I think, ridiculously low. You can see the 52-week range. There's just a lot of stuff. A lot of the analysts think it's a strong buy. A lot of people say it's a sell. I don't know. I stopped kind of making videos on it. I really shouldn't, though, because I still believe that it's good. Wall Street believes it's good. Seeking Alpha believes it's good. It just doesn't really make that much sense to me. But I get it. When something wrong happens, people sell a stock, and that's enough to drive it down. And then lastly, we have NASDAQ. NASDAQ was just sitting in the portfolio before. It's a dividend payer. I figured I'd wait till we get a dividend payout, which is coming on the 31st, and then we'll sell it and then put it into JEPQ. So, yeah, that's kind of the plan with that. I might sell it before, just so when they take the snapshot at the end of the month or the beginning of next month for JEPQ, I'll have the extra shares, because I'm going to get so much more value out of JEPQ's dividend payout than I will of NASDAQ having like the extra 80 cents or $1.60 sitting in the account as cash. So that's kind of what's going on. And again, now that the portfolio is growing, we're going to have these recovery days, which will help us get back to positive a lot quicker. I mean, seeing us pop up with $44 on the gain, that's awesome. As opposed to, we had a lot of days that were like 3% losses, 2% losses. Like this is a 1.37% gain. But it didn't hurt as bad because there were like $5 losses, So now we've got some money in the account. I'm happy to see these gain days of 1%. We were buying cheap for a long time. I still think we're buying cheap now, and yeah, just keeping our head up with that kind of stuff. All right, guys. So with stocks, that's kind of what's going on. Nothing crazy in the market except for the inflation report reaction, which was the 25 basis point rate hike, which caused kind of one of these. So it's whatever. We all kind of expected it, and honestly, I expected it to be worse. So part of the channel, obviously, happiness, health, and wealth. One thing that is happiness related and sort of wealth related at the same time was I decided to get into some like Pokemon card collecting stuff, and was having a little bit of fun with that. So I personally believe, and again, not wealth manager, credit counselor, financial advisor, none of that, but I believe that when the market is coming down and people are like terrified or like losing jobs and that kind of stuff, one of the best things to buy first are collectibles, right? Because I have this theory, and I don't know if it's true, but I've been right, or this has served me well. I shouldn't say I've been right, but it's served me well in the past. That when the sky is falling, people want to keep up with appearances, but they have to get rid of some stuff so they have some money, okay? So, like, the first thing that I think people sell off are like jewelry, watches, Pokemon cards, Tom Brady signed helmets, that kind of stuff. Because that's the stuff that, like, you don't see on the day to day, or you don't really notice. Like, if somebody sells their car, you're like, dude, where'd your Porsche go? Right? Like, oh, you sold it because you can't afford it? That sucks. But people are more inclined to oh, I got this Charizard here, like, I can off that thing, make a grand real quick, keep it moving, right? So I think there's a lot of that goes on. I've had some good pickups with just different stuff that I wanted to buy, whether it's like a nice set of speakers or a bicycle or whatever. But I'm taking that approach right now with Pokemon cards. I think it's a good time to get into that. There's still a lot of hype with the whole Pokemon card thing, and that's nostalgic for me, so that's kind of fun. But so I've been doing that. I have some cool cards that I was able to get. So maybe we'll do a little like mini show on like these are what I got. But so that's been kind of fun. You know, sometimes investing doesn't have to be stocks. Sometimes it can be other stuff. I think your core should be stocks, but if you want to have like, 3 to 5% of your portfolio or your assets be something that's pretty cool that you like why not? Why not buy something that you like that's a potentially appreciating asset? I like art a lot for that. I have some pretty cool art that I always say art's like stocks that you can look at. So buying some cool stocks, like I have some Hokusai originals and stuff, which is just fun. Like, I don't know if people know who Hokusai is. He's the guy who did like the big wave painting thing. But having like a cool original like painting or like woodblock print from the guy, like it's a conversation piece. I get to look at it, and sometimes I'll just like stand there and stare at it, and it's like, wow, this is like pretty cool, But need be, just like I'm talking about, if times got really, really bad, I could be like, well, let me just offload this Hokusai. Like, I got this little fossil thing. Let's get rid of that. Let's sell that fossil on Letgo, like, or wherever you sell a fossil. I don't know. Random stuff like that, guys. It's kind of fun and it's a little different. So, been getting into that. Like, look at this. This is sitting here right here, right? I got this new in box 2-player starter set, Pokemon set. Trading card game. It's like the deck builder pack thing. And like this is new factory sealed. Hold on, let's see if you can see this. And nope, my webcam's not good enough. But this is from 2000. This is 23 years old, new in the box, right? Shrink wrapped from the factory. So pretty cool, right? Like if anyone's a Pokemon nerd or a gamer or anything like that, maybe you'd appreciate that stuff. But that's something that I've been having a little fun with and kind of diversifying. Unfortunately, with that, I bought some packs and I got some like terrible cards, and now I have weird, terrible Pokemon cards in my office. But that's okay. So, but yeah, I'm having a little fun with that. This weekend, I'm gonna be slammed at work, so I'll try to make some shorts. I need to go to the gym on Sunday. Need to, so I'm gonna spend like probably 2-3 hours at the gym, get some work in, because I don't really feel good if I'm not at the gym. Excuse me. Yeah, I'm tired. I mean, I'm making YouTube videos at 11:30 at night because I just haven't had any time to sleep. I haven't had any time to like get at this stuff, which is good. That means money's coming in, and that means objects in motion stay in motion. But yeah, with that, I wish you guys all happiness, health, and wealth. And roll the outro.